Not sure if you have seen it already, but there's a critical video that came out yesterday on my channel with Claudia Sahm. Yes, the economist behind the Sahm rule. We went through about an hour of Economics 101. We talked about the job market. We've talked about adjustments. We talked about our expectations for rate cuts. We broke down the Sahm rule. We talked about why the Sahm rule broke, in her opinion. Folks, do yourself a favor. Look up that video. I think it went live yesterday at 5 a.m. She is a Fed expert, so much so that she was one of only 9% of economists that called for a 50 basis point cut last month. So she knows what she's doing. I appreciate her time. Also, do me a favor. If you like the video, leave some comments. I want to send them to Claudia as a thank you for coming on our channel. She is a monster in the industry. She is very well known. For her to take an hour out of her time to visit with one rental at a time to help all of us be just a little bit better is a true gift. So if you watch that video, please leave a nice comment, and I will make sure Claudia sees it as I reach out to her on X. Again, one of the most important calls by Claudia is she only sees 100 more basis point cuts. In fact, Claudia went as far as to say, Michael, I think we are going to get 25 in November, 25 in December, 25 in February, and 25 in March. And then we will be at or near the neutral rate, and we will be over. So again, that's what Claudia is saying. She's not talking about 200 basis or 250 basis points. She's like, we're 100 basis points from being over. We also talked about why rates have shot up. We talked about why mortgage rates have shot up. I thought that was a very interesting discussion. And thankfully, my opinions aren't that off. I thought that was very encouraging. So that was a fun conversation. We talked about the most important number that all of you should be watching. I proposed the weekly unemployment claims. She did not like that one so much. She thought the average person should watch the unemployment rate. It's okay to disagree. I certainly want my data more regularly than the unemployment rate. We do get the unemployment rate tomorrow. She does think it's going to be 4.1 and stay pretty steady, but there is a risk for it goes higher. So again, if you watch the Claudia Sahm interview and you leave a nice comment, I will certainly take a picture of your nice comment and send it on the way. I think I've sent her 7 or 8 comments already. So you guys are awesome. Thank you for being great people and encouraging newcomers to the channel. By leaving nice comments, you know what that means? We might get her back. If we send Claudia Sahm some nice comments, maybe I can reach back out and say, hey, would you come back on and talk about these things? So that would be very, very cool. Well, let's talk about PCE. Let's talk about inflation. We got our third inflation reading of the month. PCE, again, PCE core being the one that is often said to be the Fed's favorite. Folks, it didn't go down. Frankly, folks, it didn't stay sideways. Core PCE went up. Yes, it went, it stayed flat. My mistake. It stayed flat. It was expected to go down. So here, read the numbers. Last was 2.7. Expectations were it would go at 2.6. Actual was 2.7. So the fact that core PCE has not fallen for 6 months. Again, one of the things that we'll see in the next number headline is it has fallen, and it's fallen quite dramatically. But why? Oil. Oil is the reason the headline number is down. So again, headline number last month was 2.2. Expectations were a fall to 2.1. And guess what, folks? Inflation, PCE headline inflation is now 2.1. That is like really, really close to the Fed's target of 2%. Do we have victory? No, we don't have victory. We need to be looking at core. But again, the masses will be looking at the headline number and think the battle is over. Next up, let's talk about weekly unemployment claims. Again, remember, folks, it was just 4 months ago we saw that weekly number jump to 255, and we're like, hey, yellow alert. Does this continue? And the answer clearly is no. I don't know what happened that 1 week. But we are definitely on the other side of that. As an example, last week was at 228,000. Expectations were 230. They came in at 216. Yes, folks, 216. We are back to some cycle lows. We've been trading in this band, of 230 to 220 for a while, and we just broke to 216. So again, the unemployment market, the elevator up is still not happening, at least not as of yet. We have seen some job cut announcement. We saw Dropbox announce a massive 20% layoff. In reality, folks, just so we know, 20% is without question scary. And if you are one of these impacted folks, it sucks, no doubt. But a 20% layoff at Dropbox correlates to about 500 people. 500. Now, undoubtedly, these 500 people are very well paid and all of that, so it sucks. They will get likely 6 months severance or something. But yes, 20%. I don't know about you, but 20% is scarier than 500, at least in my opinion. So we'll see what happens there. We did get some Challenger and Christmas data about the job market. It's interesting to kind of read their summary. They said job openings are down. We saw that in the JOLTS report. Remember, the JOLTS report on Tuesday was down 500,000 from expectation. Hiring is flat. Basically, what the article says is companies are holding pattern until post-election. Man, is everything in our economy just on pause until after the election? The answer is yes. And again, we brought that to you about 6 or 8 weeks ago, saying we are going to enter a slow patch. People are just going to pull back and just say too hard, too scary, too pissed off, whatever it is. Lots of stuff have gone on hold. But good news, the election is less than a week away. The nonsense is almost over. Thank goodness. Other things I read in this Jobs Challenger Christmas report is job cuts are up 3.7% year on year. That is actually the highest since 2009, ex 2020, right? If you remove 2020 out when we shut the economy down, which is not something you could trend, it's the highest since 2009. So again, there's some pretty rough data in this Jobs Challenger and Christmas report. One thing to note is, though, the October layoffs announcements were actually down 23%. And much of that was the Boeing strike. Boeing accounted for roughly 17,000 of the roughly 55,000 announcements. So again, lots going on. Obviously, we talked about PCE core not moving down. We talked about a weekly unemployment claim that was strong, meaning lower. Guess what happened to the 10-year note? It went up. We now have a 10-year note at 4.3. What does that mean? It means mortgage rates are going up again. All of that said, the big number of the week is tomorrow, the jobs number. And it seems to be weird. I don't know if this happens in past months, but it certainly hit my radar today. I saw a report today talking about trying to explain away a weak number. Now, again, we've had 2 hurricanes. We have a Boeing strike. According to this article I read, it says experts expect the Boeing strike and hurricanes to lower job creations by 50,000. So again, right now, the expectations for the job number is still 100,000. I will highlight again the Claudia Sahm interview. We talked about that number, and I asked her, Claudia, would you take the over or the under? And without hesitation, she said she would take the under. She thinks this number is going to be dirty and going to be weaker on the surface. And then, of course, Claudia does what she does, and she helped us understand why. She talked about why the adjustments will be there. So again, Claudia's discussion was amazing and frankly helped me be better, and hopefully will help you be just a little bit better as well. Of course, today's Thursday, which means we had our Wednesday accountability group inside school. If you haven't joined school yet, I honestly don't know what you're doing. It's 67 cents a day to be around 300 plus amazing folks. Ask your questions, get answers. 3 accountability groups. We have a unicorn agent mastermind that occurs, I think, on Tuesdays. It is the place to be if you have any interest in real estate investing. Again, we are at 7% mortgage rates, which means it's terrible for first-time home buyers. It's frankly rough for home sellers. But if you're an investor and you know how to do the work and you know how to find motivated sellers, this buyer's market is amazing. It's just is what it is. I don't make the rules, right? Don't hate the player, hate the game. What we are walking into is the perfect one rental at a time environment because we are disciplined. We know how to do the work. We're willing to write disrespectful offers. We're willing to follow up 3, 4, 5 times to get our great deals. We only need one. Any idiot can buy a property at list price. We don't do that. We find motivation. We negotiate closing costs. We get repairs. We are doing everything we can to make sure that our deals are great and they cash flow at today's rates. We do not play this date the rate nonsense. We want it to cash flow today. And if some point in the next 5 to 10 years rates go lower, you have a chance to refi. But do not bet on that. We did see a number today on wage growth. Wage growth is continuing to come down. It was 4.1 last month, now 4%. At this point, it does feel like we can put the wage price spiral on the back burner. Again, if you remember, 6, maybe 9, 12 months ago, there was concern that the job market was so tight that we would have a wage spiral that would just be a constant feedback loop into inflation. That does seem like it is behind us. We have the NAR chief economist out talking about real estate 2025 and 2026. Again, they are talking about existing home sales. This is Lawrence Yun, if I remember correctly. Lawrence believes that we might get 4.47 million transactions in 2025, to which I laugh. A big, hearty Santa Claus laugh. I do not see any chance that we get 4.47 million home sales next year. In fact, I would bet it will be tough to get over 4 million home sales in 2025. In fact, really the only way to get 4.5 million sales is for mortgage rates to be under 6.25. If you get rates under 6.25, Lawrence, I think you have a chance. But again, as of this morning, they'll likely be 7.1. So not likely. To that matter, he thinks we're going to get 5 million home sales in 2026, which frankly, I laugh harder. Folks, until we get the move-up buyer back, which I do not see happening for years, we will not sniff 5 million home sales, in my opinion. I don't know if you guys saw this yesterday, but we got the pending home sales, and they were a barn burner. They blew away expectations. Pending home sales were up 7.4% month on month. Every region was up. The West was up nearly 10%. Midwest, 7. Northeast, 6.5. The South, 6.7. How could this be? Folks, it's really, really simple. Rates matter. This number here of 7.4% increase is useless today. We have seen rates go from 6.1, which is why pendings were up 7.4%, to now 7.1. This is not repeatable given the rates that we see today. It was a blip. Remember, we talked about the refi boom. It lasted 3 weeks. It is now dead and buried. We had a rise in pending home sales of 7.4% because we were in the low 6s. So what does all this mean? We once again have evidence that rates matter. In fact, we have evidence that low 6s unlocks demand. That's what you take away from the pending home sales. So what I would do is I would take a mental note and say anything below 6.25 is unlocks demand. That's what we're talking about. 6.25 unlocks demand. 7.25 does not. 7.25 buyer's market. I'm telling you, this is a buyer's market. And the longer we stay above 7%, the longer the buyer's market gets, which again, sucks for nearly everyone except home builders that build small homes and investors who do the work. What else do we got? Let's talk about some earnings. We did get a bunch of earnings. Carvana beat top line, bottom line, raised guidance. Wasn't Carvana like nearly bankrupt or something, like sub $5? I think I saw their stock today. It's like $250. Man, that is quite the turnaround at Carvana. I do not know anything about the stock. I'm just wild comeback. eBay beat top line, bottom line, weak guidance. Uber beat top line, bottom line, weak guidance. Meta beat top line, beat bottom line. They raised their annual CapEx expense, which the market didn't seem to like. Microsoft beat top line, bottom line, weak guidance. Folks, we are starting to see a trend. A lot of companies are issuing weak guidance. Is this a sign just of Q4 malaise, like we've been talking about for a while? Is this something bigger? Again, lots and lots of stuff going on. I hope you have an amazing day. Again, tomorrow we get the big jobs number. Before we go, let's congratulate some people. I want to congratulate David. David just recently got his golden ticket, which of course is his first deal. David just got his next deal. So David, congratulations. Your card will go out in the mail. And I want to congratulate Daniel. Daniel is our newest member to the school community. Again, Daniel, remember, introduce yourself, comment. You need to get to level 2 to unlock 6 hours of creative finance, and level 3 to get the 10-week $1,000 boot camp for free. Again, folks, join school, 67 cents a day, $20. You need to be in the right communities. I'm doing my best to put together the right community for you. So join, and we'll see you there. And of course, don't forget, buy your Vegas ticket, save some money on travel. We're going to meet in real life February 15th, 16th. Join school.com, one rental at a time. Buy your tickets for our in-person event. Just go to Eventbrite, search one rental at a time. We'll talk to you on, I guess we're going to talk to you live on Monday. I will be doing a daily financial show Sunday, but it will be recorded. Why? Because I will be running a marathon Sunday morning. The marathon starts at 6 a.m. So when you are watching Sunday's 7:30 a.m. Daily financial news, I will hopefully be at mile 8-ish, assuming we start on time. So we will talk again live on Monday. Wish me well on Sunday. I have no idea what to expect. Been training for it almost all year. My plan right now for the marathon is sub 6 hours. I'm not trying to set any course records. I think my plan is to run a half marathon nonstop. And then based on how I feel, I think I'm going to run 2 minutes and walk 1 minute the rest of the time. Again, I'm an old man. I don't want to stress out my body too much. But hey, we'll see what happens. Never done this before. Wanted to do something hard and cool. And I will be doing that Sunday morning. So wish me luck. Take care. Bye.